There was a what?
There was a $15 million tether move about an hour ago, so we might see a bump here.
Well, you're probably right, actually. All right.
They won't let this thing go down easily.
Yeah. Check this out. This is always cool. I love looking at this, right? So this is our current BTC chart, right? This is BTC versus the dollar. You wouldn't even be able to tell the difference when you look at the old ones. I should have actually done that and like tricked everybody, and so nobody would have known when it was.
Where do you have the link posted? I just got on.
Well, now I put it everywhere because I shared it with, I opened it up to the public and everything. So it's in all the channels. Public, it's on Twitter. I opened up the stream to the public.
Got it.
So just don't make all, like the racist comments you normally make, because now everybody can hear us. I'm still going to make all the racist jokes, though, especially Jews. Fucking hate those people. No. Wait, why is this only going back to 2015? I thought this one was older. What a predicament. All right, let's do a different one then. I don't remember what was the other one I used besides Coinbase. I can't remember when I did this before, when I'd show everybody. BTC, USD. Huh. Oh, Gox. That's great. Oh, yeah, stamp. That's what it was. Anybody want to try to pretend like they could tell the difference between these two? Like, which is 2018 and which is 2013? You see, isn't that nuts? And now, when you look at it, it's all relative, right? So, look at it this way. From bottom to top, that parabolic run, we then came down at this point 87%, and that's actually not, it actually goes a little bit lower, but just call it 88%, 87, 88%, versus what we're dealing with now, where we are down 70%. Now, that was just one. I just showed you this was the major drop that we had in 2013, the end of 2013, right? Zoom in and take a look. Since this is all relative and you deal with smaller ones all the time, like little miniature versions, you really can't tell a difference. This just looks like the exact same chart we had up. It's just a much smaller version. And since it's all relative, this is another 82% correction. Except this one was obviously a much shorter term. Happened over the course of a week. But these sorts of corrections were frequent, and they were nothing. I mean, you had this run before the Mt. Gox crash in 2013, and you're talking about a 90% crash, which ours is 20% less than that. Like, we're not even remotely close to what we actually could see as far as the bottom of this correction. Not even remotely close. There's still so much more potential for us to go down. I've been calling for $3,000 to $4,000 roughly, and now I'm pretty sure it's going to be at the far end of the 3,000 range, or lower threes. I'm pretty sure. I wouldn't specify until much later exactly a level, like a specific level. For long-term projections like that, especially for majors like Bitcoin, I'm just not comfortable doing it. Not only because there's a high probability of being inaccurate, but that sort of information gives people the wrong idea. They feel more confident than they really should in making some sort of larger investment. I just don't want to be responsible for that. So if you look at Bitfinex, you could actually see it's even more defined. Because Bitfinex has far more data. And it's like, looking at what we're looking at now, right? It's the exact same thing. Just go back. You can even take a screenshot of it. So just like an overall idea of what this market is capable of and what it does. Take a look. Oh, look at the Flu's website. There's a penis. So I was showing everybody. How awesome is that? There's literally a dick on their page. Come on, switch. Look. How great is that? How amazing is that? Do you think anybody there noticed the fact that they have a very well-defined phallic head with the hole at the top and everything? Apparently it's filled with babies just shooting people all over the place. Oh, God. Yeah, that's what I was thinking. I was like, oh, it's all veiny, too. Nice. And I like how it gets darker. This is one of the purple-headed yogurt slingers as opposed to the, standard variations. Guys are preverts, you know that? You disgusted me. All right. What were we just talking about? Oh, yeah. Let's BTC it up. Take a look at this chart. Now we're going to go back. What were you saying?
Where do you see a bounce here, like 5,700 if that?
58 would be the support, but I don't know if that's going to hold yet. I'm going to go. Well, we'll look at that in a minute. But just to go back, and it's like, I really have to zoom in. But it's fucking identical. Like, I have to zoom in so much because you can't even see it when I had it pulled out. Pulled out. You couldn't even really see it because it was just so tiny. It's this little tiny minuscule bump at the beginning of that chart. And now when you zoom in, it's just identical to what we have now. The only difference is back then we had a much deeper correction than we have now, where you have the flash crash, which went down to 90%. That was a 91% correction. And overall, even just shorter term, we had 70%. And you have all these little corrections. The primary correction, the initial one, which happened in the shorter term, which took less than a month, was 70%. So you have all these corrections that far exceed 80%. I've seen a couple people post charts that had a list of all the BTC corrections, and this being the main one, just because this was the Mt. Gox crash. Other than that short little flash crash, the main one did take over a year. I mean, it was going down for 411 days, and it went down 87%. It took a year and a half, guys. That's a year and a half to correct. And then we went sideways for a very long time before we started moving back up again. And even then, we were moving up nicely, but it took a while to really pick up speed. Once we picked up speed and went parabolic, that's when we went absolutely bonkers in 2017. But until that happened, a lot of people were pretty weary. I mean, even here, halfway up in the middle of our parabolic rise, we had a lot of significant corrections that people thought, we've maxed out. We're never going to get above 3,000. Nobody thought that you were getting above 3,000 until you actually did. Same thing happened with 10,000. Same thing happened with 6,000. There's all these targets that people assign these irrational validity to just because it's an even number. It's a psychological barrier, what have you, whatever bullshit excuse people come up with. In reality, it means nothing. All it's doing is telling you people have a tendency to trade at even numbers, or everybody wants to sell off at this level because they just don't accept that it could go higher. At this point, I think that's thrown out the window. I don't think anybody thinks that. I don't think at this point anybody doubts what the potential is. If we had a chart that showed us $100,000 Bitcoin was in the near future, I think it would be pretty universally accepted throughout the community that we're going to go to $100,000 Bitcoin. I wouldn't expect a lot of naysayers who said we're never going to break 25,000. It's a psychological barrier. We're never going to get above it. We're always going to stop. because it doesn't make logical sense, because every time that's happened before, we've broken right through it, and now we have an even more bullish community than we had then. People who are in the market now have been through this correction, but a lot of them weren't in the correction earlier, and they don't understand how insignificant it really is in the long run. In the long run, we're talking about 20% less on this correction versus 90 some odd percent that we lost on prior corrections. So right now, even at the lowest low that we've been at, which we're pretty much at right now, you're looking at barely 70%. You have 20% to go before you even touch 2013's multiple corrections of the same amount. So you're looking at under $2,000 for Bitcoin. Bitcoin would have to go down to under $2,000, and it would have to take another 8 months for it to compare to the duration and the extent of prior corrections. So that should give you an idea of how insignificant these little drops are. As a long-term investor, I have a substantial amount of my portfolio that's in longer-term positions. And I have no problem selling those off because I know that there's a very deep correction necessary. It has to happen just like it's happened in the past. That doesn't mean you're a perma-bear. That doesn't mean you're bearish or you're a fudster or anything like that. It means you're a logical person who's analyzing data to come to an intelligent, intellectually complex, but intelligent and logical conclusion. Just like a scientist analyzing data, you're analyzing data pertaining to your science, in my case, financial markets. And I'm telling you without a doubt in my mind, we're going to have to correct at least very close to that level, if not that level. I think realistically, there are other factors at work. There's psychological barriers like we were talking about before where people don't expect to be able to break certain prices. I feel similarly on the way down, but it's different. I'm not saying that people won't accept that we can go that low. It's more, so many people felt that they missed out on the market last year. They had this bull run that people simply didn't get a chance to participate in, and they were all jealous and upset, and they missed out and they were pissed. And then by the time they finally got in, they got completely wrecked. When they see Bitcoin at $3,000, these motherfuckers are going to go bonkers. They're going to get in because this is going to be their 2017 bull run that they missed out on. This is their chance to do it. They missed out before, but now they have a second chance. And when a second chance appears before you for something like that, you don't want to miss out. I very firmly believe all those people are going to flood into this market like maniacs. And just like we were convincing our friends to buy into crypto last year, they're going to be trying to convince their friends to buy into crypto. And on and on and on. So there's a huge pool of potential investors. Don't worry about financial institutions and institutional investors. If you really think that institutional investors haven't already dominated this market for the last year, then you're living on another planet. Every time a news story comes out that says, oh, this new institutional investment group is interested in investing in Bitcoin, and then you see people talking about it on Twitter, they're essentially telling you that they don't pay attention. They're saying, guys, did you hear that this thing that was painfully obvious for the last year, now they want us to know about it? Isn't that cool? Because that's all those articles are. That's Jamie Dimon and the powers that be at the big banks. When Jamie Dimon came out and said, Bitcoin's a fraud, it's a hoax, it's nonsense, it's bullshit, you're going to lose all your money if you get into it, it has no future, he goddamn well knew what he was doing and what he was saying. He was heavily into it at that point, as were a lot of people on his level, but they didn't want you to know that. So now when there's a story that says Jamie Dimon reverses his position and says that JP Morgan's opening a crypto trading desk, he's ready to tell you that now. He just wasn't ready to let you know that in the past, so he lied to you and he manipulated you just like he did to me and everybody else. There's plenty of institutional money already here. ETFs and all that stuff are great. It's going to bring in new money, but it's really the retail people that it'll bring in. There's a category of people and a class of people like my dad. My dad has money. He's an investor. He has a pretty substantial and diversified stock portfolio and equities and commodities. He wouldn't have gotten into crypto in a million years if it wasn't for me. He gave me $15,000 to put into crypto, which I promptly lost in January, but let's not talk about that. Let's talk about what could happen if people like him, these baby boomers who don't understand it, who don't have kids who are already in it like us, kids in their 30s and 40s who are already doing this, pushing them to do it. Those are the people that can get in with an ETF and that sort of thing. So that being said, it's great, but when you see all these stories coming out, the negative stuff, a lot of it is bullshit. The positive stuff, a lot of it is bullshit. To an extent, you have to factor in fundamentals, technicals, everything. But when you look at a chart and you can see that this correction right now isn't remotely close to what we've had in the past, and considering how financial markets behave, there's no reason to believe that this is going to stop going down before it gets to $2,000 to $4,000 range. You know what? I'll throw the 4,000 out the window. I've been saying for the longest time, 3,000 to 4,000 is going to be where we end up for the bottom of this correction. While some people have had us going lower, I can't actually imagine stopping close to 4,000. It's going to be in the very low threes, maybe mid threes, closer to the lower threes. And even then, right? Let's map it out right now. We just looked at the old correction where we were dealing with 90%, 92%, 89%, and 94% were the biggest corrections that we had in the past. Let's take a look and say, if we were to go all the way down to 3,000, that's still only 85%. That's not remotely close to the corrections that we've had in the past. Not remotely close, because we've never had the sort of organic or the sort of parabolic movement that we had prior to this correction. Close. 2013, it was a huge run-up, but it wasn't quite this significant. So if this were to take 2 years, I wouldn't be surprised. The problem is people in the market who assume that just because it hasn't happened yet in their recent memory that it's not going to happen, it just distorts their perception of reality, and it affects the market at large because we don't have people trading the way they should be. Ideally, I would love to see less interference. I'd like to actually see some regulation. Wouldn't necessarily be a bad thing. And we're already seeing it. It's actually having a positive influence. The reason why the ETFs are getting pushed off and postponed is because they don't have the infrastructure and the security and the exchanges in place. Once they do, they're going to have a better shot at getting this thing done. But I have no reasonable expectation that that's going to happen in the foreseeable future. They pushed off the decisions until September, some of them until the end of 2018. And it's more likely you'll see something happen at the beginning of 2019. I think we're going to get a nice run before that and start before the end of the year. I don't think we're going to carry this correction through to the end of the year. I think in the next 30 to 90 days, we'll see some big negative news that does aid us in pushing us down, possibly a rejection of all the ETFs and all the plans that we've been hearing so much about. But we're going to need some sort of catalyst, and some catalyzing incident is going to give us the push we need. We're going to have a larger sell-off. We're going to get down and finish our correction to $3,000 thereabouts, plus or minus. And then from that point moving forward, every person who's in this market right now is going to have the potential to make a ton of fucking money. But that's only going to happen if you have the capital. So you've heard me say it a million times. Preservation of capital is the most important thing you could possibly do as an investor in any market, but especially in a market that's this volatile and potentially profitable as it is, where you can get parabolic moves on a massive scale, ride a huge bubble, and once that bubble bursts, you need to know when to get out and how to get out to make those profits. But we have time, and we have an opportunity we have time on our side, but we have an opportunity that a lot of people don't have. And if you think about it, all the people who were able to become Bitcoin millionaires at the end of 2017, most of those people lost 50 grand in a month like I did in January, only it happened to them in 2013 when Mt. Gox happened. That's the difference. We're living the same life, the same experiences they had, just pushed back a couple years, and they got a head start on us. Because you know what? 2 years from now, there's going to be some young asshole who's investing in crypto thinking about how we're early adopters. And all of us in this chat right now, they're so lucky they got in so early. They must be so rich. I can't believe they got in that early. Just the way we look at the guys who were in 2013. The guys who were in 2013, look at the guys who got in 2008 and 2009 as, the lucky ones who managed to squeeze in, and they're early adopters. It's all relative. It's all fractals. You have to remember that. Like, when you have fractals, whether it's Elliott wave or you're looking at chart behavior, if you're looking at trading activity, the concept of fractals is that everything is self-contained within. There's a smaller version of each incident contained within it. So if you're looking at a chart, there's a miniature version of that chart in the segment you're looking at. And when you dive down deeper, that's replicated level after level after level, which is the entire principle behind, like, Elliott wave, for instance. Every wave has a subwave. Every subwave has a sub-subwave. That's why there's so many so many levels to Elliott wave theory, and you need to actually factor them in. You need to look at a 1 minute chart to a 5 minute chart, 15 minute up to a 1 hour, 4 hour, daily, weekly, and monthly chart. You can look at all those charts for every imaginable financial market, and you'll see the exact same behavior because it's a science and it's not in any way random. That's my long spiel about it. I think it's really interesting to look side by side and see how, like we just looked at, how there's corrections from a completely different era from 2013, yet the behavior at the time, the way we had the lead up to it, the parabolic movement as the bubble was building before it burst. In the past, we had Mt. Gox, and that was the bubble that burst that was able to put us in a position to move up the way we did since. We need our Mt. Gox. I don't know what it's going to be. I think it's probably going to have a lot to do with the stock market, which is also in need of a very, very steep correction. I advised my father to get out of a few positions and reduce his exposure, which he did. He took a lot of profit after the run they've been on for the last year or two. There's a lot of potential for this thing, but we got to get down there. Taking a look at it right now, since we already have it up, let's take a quick look at BTC. Hold on one second. Give me a minute. Just gotta pull up a couple notes I was actually looking at. Hold on, I have to be funny. Da, 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 da. Okay, sorry. Back to this. All right, so we the TA here doesn't tell us too much because of how erratic trading's been. Short term, you really can't do much analysis. You can't really come up with an Elliott wave count that's very accurate at this point. It's hard to say when you have a combo wave like this, where you have a WXYXE or a WXY and triple three. You have a lot of action and it's moving back and forth an awful lot. It's very difficult to really iron it down and to have any level of confidence in your analysis. It gets very difficult. What I do like to look at though, in these situations, is just focus on the supports and what we've seen before. And we've seen consistent support. We just haven't been able to break below, no matter how bad and dire it looked. 5,800. We've gotten close on numerous occasions. I would even loop in 6,000 because depending on what exchange you were on the deep corrections, we actually did get down that low. In this case, was 6,000, the first one at the beginning of February, but in reality on some exchanges it was a little bit below 6,000. So overall I would consider that 3 tests of that 5,800 support. Even though there are tiny variations here and there, it's 5,800. Maybe you could make an argument, all right, it's 5,780 or some shit, but whatever, it's 5,800. If we get down below 5,800 and we're awfully close, we have a really good shot to drop down to one of our lower correction targets. Let's take a look. I mean, look at, we could do a fib retracement from the main parabolic move, right? Because that's really what we're retracing from. We're coming back from that. You would kind of have to go back further than I would like, but we could look at the daily and see it that way because you'll get a lot more data on screen that way. You're not going to be able to get in the entire thing because there's just so much information there, but you can estimate it at least, and that's really all we have to do at this point. Let's come up just with a rough estimate, and you can see uh-oh. There's so much stuff on this chart. I don't even know how this is going to work. So we have 48 and change, 48.66. That's my target for strong support, very strong support. And that's really it. That's all we have for Fibonacci before we get down to 4 and then 3,600. So the mid 4s, there's some support around 44.40. I think it just sounded cool to make it 4444.44. That would be funny for whatever reason. But that's our support. That 4,900 to 5,000 is of the money range. Well, for really 4,850 to 5,000, that'll be a strong bounce. Sort of like what we saw when we would hit 5,800. It happened before. We actually ran our bounce all the way back up to 10,000 after getting down. We were just never able to get back up above 10,000. But we ran all the way up after that correction. We ran back up. This one we did obviously, but that we didn't get stopped at 10,000 like we did here. We just couldn't get back above 10,000, and that's pretty much where everybody accepted. Like, all right, this is it. This is the correction. It was just a function of how low are we actually going to go. In which case, nobody can really agree on anything. I haven't heard any consensus. I mean, early on, I've been saying for God knows how long. Anybody who follows me knows how long I've been telling everybody that we're going to correct to 3,000 to 4,000 using that exact range. At this point, I'm comfortable not only affirming my past analysis, but going so far as to say it's not going to stop remotely close to 4,000. It's going to be in the low 3s. But our next bounce, where we're going to be looking at some really strong extended run potential on alts, is going to be at about 5,000. Until then, we'll have days where we can actually trade and make some money. But it's not going to be anything extended. I wouldn't get into long-term trades at all, really. I have some limited long-term trades that I will get into between now and then. But most of my money that I typically would have in longer-term stuff that I've now taken out I actually took it out the last time we corrected and came down here. I didn't buy back into my major long-term plays here. Yeah, that's gonna be the time to buy in. If you want to do a medium-term trade and you want to get back into your longer-term plays, I would do that around that 4,800 to 5,000 range, because then from there we could get several $1,000 bounce, which will carry alts in some cases 5-10x. Some of the alts that have been out for quite some time, that aren't new, that aren't particularly low on volume or liquidity. ICX, I mean, look what's been happening with ICX today. It's essentially a dead coin. If ICX is down at 30, this used to be $100, and now it's 50 cents. It was trading consistently at $50, and at one point it got pumped as high as $100 for a day or so. So imagine what ICX could do, down at 25, 35 cents. If you were to buy in at that price, you don't need it to go up to $100 where it was in the past, nor should you expect that to happen. That would be an irrational expectation. But if you were to get in at that price, all you need is some stability in the market, and you could see a 10x on an established coin that's done it before. Not even a question. On a short-term $1,000 to $1,500 bounce on BTC, half of the plays that you look at in the USDT list here, this is versus the dollar, not even considering the price of Bitcoin, you could see a 10x with one single $1,500 short-term run over the course of 12 to 20 days on BTC. You could see a 10x on probably half of these things. They're so cheap and inexpensive now, and the money's going to flood back in, not because there's fresh money coming into the market, but there's so many people just like you and me who have been in this market for a while, for a year or even more, and they've had a lot of these coins in the past, but they sold them off because they were just dropping like a rock. They're going to want to buy back in, and when they see those lower prices, even right now, a lot of members of the group who weren't on the live stream earlier and or public who wouldn't have known this, but a lot of members of our group have been saying, like, everything is so cheap, we have to get in. There have to be some plays that we should enter, right? Like, what should we get into? My response is nothing. Stay the hell out. Why do you have to get into something? Just because it's cheap means you have to buy it? There's really, really cheap whores that walk around the streets of Las Vegas. There's also really classy ones that you have to call on the phone. They only take credit cards. Are you going to go and get the one that has HIV because she happens to be really cheap and you can't resist a good HIV-riddled whore? Doesn't really make much sense. I would go with classy over the HIV, but that's just me, and to each their own. So that's a personal determination that you're going to have to make. But my point's pretty obvious. There's no reason to get in unless you have a level of confidence higher than what I have right now, that there's a good chance you're going to do well. Stay out, preserve your capital. Let's see what happens. Give it some time. It might take a couple weeks. It might take a couple days, or it might take a couple hours. But if we can get down to $4,800 to $5,000, there's going to be a lot of potential there for the run that follows. Some of these alts are going to go on epic runs. And if you're positioned to get into the right ones, and you know how to play them right, and you know how to reduce and mitigate your risk, you're going to be able to make hundreds of % on your investment without ever risking more than a few %. Obviously, everybody in the group knows what I'm talking about. For those who don't, you've probably seen me tweet about it a little bit, but I focus heavily on using stop losses on every play. I teach how to do that, as well as use USDT pairs, because it eliminates a lot of the risk associated with a stop loss based risk mitigation strategy. So you need to use all those things and combine all those tools to be able to reduce your risk to the extent you need to, where you never have to go beyond 3 or 4%. You can have $10,000, or you could have $1,000 in the market, and you never have to risk more than $40, but you could walk away with $10,000. That's just insane. The fact that that's even a possibility is nuts. It's like winning the lottery, except you have much better odds than winning the lottery or going to Vegas. You could actually make an intelligent decision. You can analyze the data and make a plan, but you have to stick to it, and you have to make sure that you're covering all eventualities and prepared for everything, because if you're not, you'll get wrecked very easily. We had popular Twitter guys I heard the last couple of days got ballsy and got wrecked and lost like 6-figure sums or something. I didn't see it happen live, but I heard about it. So even the best of us can take it pretty hard So you got to make sure you know how to mitigate risk. That's the most important thing you can learn. And I don't care if you join my group to learn it, but you need to learn it somewhere. So I would check all the free resources you have at your disposal and make sure you guys in the public group or anybody on Twitter who ends up watching this, you guys make sure that you got that shit covered and you're doing whatever you have to do to learn. Because once this market stabilizes, you need to be prepared because we're going to have a hell of an opportunity. See, anybody in the chat have any questions? Let's see. Thank you, Crypto Bentley. That's nice of you. I'm happy to help the community. It means a lot that I'm able to. I try very hard to. Trying to keep it above 6K. I don't think anybody's trying to keep it. I think the volume's pretty shitty. We're not seeing a ton of buying or anything trying to manipulate the price up. I think, if anything, if you were going to make that argument, it probably would be the powers that be with Bitfinex and the exchanges, since we just saw a big move on Tether. Some of the guys just mentioned that there was a massive, what was it, like a $6 billion or whatever, $600 million move or something on Tether, which could be significant. But where do I put? Where's the other Bitcoin chart? There we go. Yeah, there's no big increase in volume or anything. We're going down. It's just happening relatively slowly. The miners don't really have enough control to manipulate the price up anyway. And if you look at in the case of like Ethereum, look at what happened to Ethereum. I had posted a while ago and I said with Ethereum, if the price is less than $400 a coin, it's not going to be sustainable to mine it. A lot of larger mining outfits that have huge expenses but are efficient can take a lot less money per ETH and still make it profitable. But largely, some of these large mining houses that have hundreds of units, thousands of rigs, are going to mine something else besides Ethereum because at $300, it's just not profitable. It's not worth it for them to run the electricity when they're going to be getting 6 of these coins a day, and they're only getting $300 a piece. That's $1,800 or $1,800 when you're using $3,000 worth of electricity. Doesn't make any sense. It's not profitable and it's not sustainable. That was a big problem. I had posted about it, and since then I've seen some other people on Twitter discuss it here and there. 263 now, after going down another $20 today. Ethereum is essentially dead in the wind as a mineable coin. The only hope they have are that the guys that do hold on, that don't leave and move on to something else, are there to make money when everybody else moves on to something else and they pick up the slack, and now they're able to earn more tokens than they otherwise would have. Ethereum has some fixes in place, but they're not going to happen fast enough, that's for sure. Eventually, they're going to be invincible from a 51% attack, allegedly. They would need 99% with their proof of stake setup, and they wouldn't be able to be subject to a 51% hack and all that stuff, which sounds great, but it doesn't mean anything right now considering what's happening with the mining community over Ethereum. So they don't have enough power to really manipulate the market to this level. Bitcoin's going to go down. It's just holding now, and it hasn't even really held that well if you look at it. We're looking at a solid red dildo today, big-ass red candle. It's not like we're only hovering at 6,200 or 6,000. And we've also only had a few attempts to get down this low before we caught the bounce. So it's very possible we break through this time. Maybe if we bounce at 5,800 and run up to 7,000 again, I'll start questioning whether or not there's some powerful entities that are trying to maintain this coin where it is. But right now, I think it's pretty organic. It looks like it's happening relatively naturally. Obviously, there's some influence and there's a lot of manipulation in crypto in general, but also on Bitcoin. But all these moves that we're watching right now, this correction, pretty sure it's, for the most part, normal. Uh-oh, what did I do? Wasn't me. All right. Well, this has been 3.5 hours. The one earlier was 2.5, 2:45. So I've been live streaming for like 6-7 hours today. Any of you guys who came in from public group or Twitter, any of you guys have any questions? Oh shit, my phone died. Huh. How should I fix this? Let me think. Obviously I'm gonna charge it, but hold on. Better idea. Let me plug my phone into charge real quick. And in the meantime, if any of you guys have any questions, tell me. I'm gonna plug my phone in. Hold on a second. Come on, phone. Let's go. $92% down since my investment in January. Should I jump off of a bridge or a building? I'm going to say neither. I think you should probably step away from the ledge, focus on positivity. I don't know what you have to be positive about, but I would say if you're looking for something, it's the potential because there's a ton of it. So what he really said was, should I wait for sub 4K and buy BTC, then alts, or buy BTC and then at 4K and then it run and then buy alts? What I think is if you want to make more money, you're going to make a hell of a lot more in alts. You're dealing with a lot more profitability in alts, but you're also dealing with a lot more risk. There are ways to mitigate that, and that's what I always talk about. My main strategy, what I teach my group and what I talk about publicly, is mitigation of risk. You need to focus on using stop losses in all your trades, and one of the biggest things you could do, especially given your situation, is buy alts with USDT pairings. So it doesn't matter if you're holding BTC or you're holding some alt. If you have a stop loss order in place and the price ends up coming down, you get stopped back out into USDT, you're back in Tether, your money's safe, and you can't take any additional losses. So it really doesn't matter what happens with BTC or the rest of the market. That being said, if you were going to make a decision and say, I'm either holding alts or I'm holding a major like Bitcoin or Bitcoin Cash, I would say Bitcoin Cash has the potential to make a lot more money, closer to what you see with alts, but it also has a potential to take a much deeper loss, like you see with alts. Bitcoin's going to be the most stable. You're going to have the best chance of stable and consistent growth with the least amount of risk. So that might be what's best for you, given the fact that you pretty much lost everything in this market. So you understand, you really shouldn't have lost anything in this market. I shouldn't have either. I lost 50 grand in January, and if I knew what I knew 30 days after that, I wouldn't have lost more than $1,000. Yeah, I would have lost maybe a couple grand. That's pretty much it. I don't think 4K is going to happen this week. I think we're going to have some support. I think it's going to keep going down, but it's got to slow down. Like if we have another 3 candles like this, we're at 4,000. It's not realistic though. There's too much support there. And the support that's at 4,800 is way too strong. I actually think we're going to get a really strong bounce. I think we're going to run like $1,500, $2,000 I think we'll bounce back up to the 6s after we go to 4,800. Not only is it the 78.6% Fibonacci retracement on the entire parabolic run, but there's a ton of prior support there from the initial run in December. Well, actually, that was still November. No, it was December then. No, it was November. Let me pull it up. I have it on the screen here. So yeah, at the time, there was like one day, there were like 8 consecutive hourly candles that were trying to break above that support. So between 4,800 and 5,000, a lot of support right there. It was caused, like 12 rejections over the course of like 12 hourly candles just kept getting rejected. And then the same thing, we got rejected a couple times later on the second attempt, and then eventually we broke through with that strong green candle, which you'll see on the chart here, which ran up nearly $1,000. I think it was like an $800 candle. So that was a nice run, but it took a really, really strong move to break through that resistance. I think we're going to catch the same thing. This last support that I have here at 44 is insignificant. It's really not that strong where I think it's going to play too much of a role. But that main support at 48 and change that matches up with the 786, I think that's going to give us a ton of support, and we're going to get like $1,000 to $2,000 run. Like we'll run back up into the 6s very potential. Like we can go back up to 6,000. We could bounce right off of that 786 and run up to 6K, and that'll give us a chance to make a lot of money on some alt plays. There's a ton of potential there. Let me get back in my Discord group. Hold on. Check. Can you guys hear me again?
Yep.
All right, cool. Yeah, so that's that. What's next? Sell your alts and invest invaders group. Yeah, there you go. That'll work. Although after being down 92%, I don't know if he could afford our group. I'm just kidding, man. I'm just joking. I don't mean to make fun. That's rude. 92% is pretty insane. Just so you know, though, with my strategy and like what I teach everybody else is all about risk mitigation. Like I said, if you have $1,000 in 10 different trades and you're using my risk mitigation techniques, and every one of those trades were to completely crash, worst case scenario, you'd lose $300 or $400 out of 10 grand. Worst case scenario. If you have one of those plays that does a 20-30% run after a strong breakout, you're going to be at the very least even if all 9 of those other plays crash. So 10 plays, $1,000 in each. 9 out of 10 of them crash 38%. It doesn't matter because you have stop losses, you have the right strategies in place, your orders are located in the perfect place based on supports, and you're going to walk away with a few $100 down on those 9 out of 10. If you can make a few $100 just on that one remaining play, you now broke even. Now imagine if you have 2 or 3 of those plays that actually go well and you make profits. That's why you have potential to make so much without ever risking that much. You really should iron out a strategy like that, whether it's something you come up with on your own or something you learn from somebody like me. There's lots of great free resources out there if that's more your style. But having a strategy in place to help mitigate risk will ensure you'll never take a loss like that again. Because I hate seeing that.
Vader, do you think anything is even considered a major besides Bitcoin at this point? I mean, you see Litecoin and Ethereum, how much they've tanked compared to Bitcoin.
Yeah, I still call the 4 from Coinbase the majors, but in reality, they don't have the consistency and stability of Bitcoin. That's a really good point. I actually haven't thought of that. We still refer to them as the majors, and I do at least, but they behave pretty much like alts. In some cases, I mean, I guess they don't. They still have more stability. Ethereum has been getting killed, but if you look at it now, I mean, even LTC is only down 5 to 8% across the different exchanges today, while most of the other coins, the alts are all 10, 25%, 30%, 35% in some cases. So I think they still have a leg up on those. I think it's probably closer to Neo and some of the other ones than they obviously would have been in the past. They're closer to just being considered large caps. I would say especially Litecoin. I don't think Litecoin's a major force at all anymore. Bitcoin Cash still is. I still think Bitcoin Cash is going to blow up. I think it's going to be worth half a Bitcoin or quarter of a Bitcoin within a few months.
I had bought Neo at $90, and then I got out of it at 60. Now it's sitting like at 15. I'm so happy I got out of it.
Yep. Did you get out of it after you joined the group?
I got out of it. I had gone to Europe in July, and I DM'd you that what should I do because I was overseas, and
I remember.
Didn't have connection, and you're like, I would just sell everything. And
Yeah.
I sold everything in July. Like I sold everything. There's nothing left, and you saved me probably like $10K just by that move alone.
That's awesome. That's what I was telling the other guys before. I was like, it's always cool when people are like, "Oh man, you had a really good call and I made money on it." That's great, and it feels good when people say that. It's obviously nice, when people say thank you. But the best feeling ever is when people are like, "Dude, when you, based on your strategy, and I sold my shit, I would have lost 45% of all my money if I, hadn't listened to you." That feels 100 times better than making somebody $1,000. I'd much rather save your capital because I don't shut up about how important it is to preserve it. So that's cool. That's why I asked if it was after when the timing was, because that's like the best feeling, knowing that people are actually not getting wrecked. I don't care as much about helping people make money. If I can stop one person from getting wrecked, that's the best feeling in the world. I love that. That makes me so happy. Thank you.
Yeah, I mean, I think it was like right before the last ONT call, like right before ONT tanked again.
Yep.
And that's when I just got rid of everything. Like, fuck this. I'm not going to even mess around anymore.
Yeah, that's, I did that. I told you guys as soon as I did. Like, once I sold, everybody knew I was serious. Once I was like, I'm even out of my bit shares. I even sold my BTS. I'm just fucking out. And I got purely into Tether, and then I came up with a strategy of just getting into USDT pairs, and that's it. Since then, it's been over 2 months now, like maybe even 3 months. And I've probably only had, like, at any given point in time, maybe like 3 open non-USDT trades. I've really stuck to that since I've come up with that particular plan, that market reentry plan. That was the first time I really designed an investment strategy based around the USDT pair thing. And since then, I've stuck to my own strategy. Just like I don't just preach to others, I do it myself. And I haven't had very many plays. And when I do, it's usually pretty rare. It's like at any point in time, maybe I have 2, 3, maybe 4 open trades. Like I was just in an ELF trade and a fuel trade, and those were paired with BTC and not USDT. But I sold pretty much at the same time as you and a lot of other guys in the group, and I saved myself a ton of money because I would have gotten hurt real bad. I mean, still, with my stop-loss strategy, I wouldn't have taken that much of a loss, but some of those days were rough where Bitcoin was doing like 10% in the red. So if I got stopped into Bitcoin, I would have taken a much, much bigger hit, up to 10%. When Bitcoin goes down 10%, then you're really in trouble. That's doesn't happen very often. I'm looking at this list. I still can't believe ICX is that's absolutely absurd. What did Jim say? If the bounce, if the bounce was really violent at 786, would we call that the bottom? Hell no. The bottom's going to be way lower. That's going to be a short-term bottom, though. I think we're going to get a strong bounce there. And I'm not saying to buy at 4,900 or 4,800. I'm saying to buy at 5,100 after it bounces off of 4,800. You want to feel like you have some confirmation of a short-term bull run. You don't want it to hit 4,800 and then go up to 4,850. You put $10,000 into the market and then it drops down to 3,000. You want to wait and you want to give it some time and see what happens. Give it a day or two and see what you can get. If you miss out on the first 5% back up, that's fine. Miss out on that 5%. It's much better than risking your money and taking a loss. And if that's what it takes, that's what it takes. Give up a little bit of the profit at the beginning so you can feel more comfortable when you actually do enter. That's what I'll be doing. Obviously, I'll tell everybody in the group as soon as I, make any sort of move. But I'm watching for that bottom. We might catch some support before then, but it's not going to be based on technicals. If there's any sort of short-term bounce or run between now and $5,000, it's going to be based on some news that comes out or some fundamentals shift. It's not going to be based on the technicals because there's nothing about the charts that's really leading me to believe that we're going to get any support. There is some trend lines and stuff, and you can use that to sort of justify a couple spots. Like here, if you were to draw like this, for instance, and say, all right, well, there you go. You have support before getting down to 5,000. It might bounce, right over here at 53.35 or something. But in reality, it's not. Not only is it not realistic, but we don't have any reason to really expect that. There's nothing right now that points in that direction. But like I said, if we do get some sort of news or you hear about an ETF gets approved or some major investors come in, some sort of pump-worthy news that causes a pump, because you know how this community loves their pump news, then we can see something short-term. But realistically, I don't expect anything until about 5,000. Then we'll get a strong bounce. We're not breaking through 5,000 and going right to 4. There's just no way. There's the 786 retracement's right there. There's going to be so much algo trading and so many bots that are going to mark that spot as the bounce point for all the alts as well as the majors, which what we used to call the majors. I'm still loving how good Knowles looks versus BTC. It's the only thing green. I'm pissed that I got stopped out of it, but it makes me happy that it's doing well considering I'm so bullish on it long term. Oh, guys, look at this. So, for those who weren't in the stream before, when I was in with the premium group, I entered into this Knowles trade when I spotted the support, and I was so proud, and I was talking all that shit. I was like, yeah, I'm the man, because it was bouncing up, and I was up like 6%, and then it broke down, and I was specifically talking about how when I have a plan, I stick to it. If I come up with a trade idea or a plan, I stick to it, and my idea was to get in there and set my stop loss here, and if it broke through, I wasn't going to re-enter unless I saw some bullish indicator, a new bullish indicator beyond what I had seen prior. And I didn't really see anything to make me feel other than the RSI being absurdly low. The fact that ZRX had an RSI that was like negative a bajillion, I think it was at 4. The fact that it was that low, I didn't really necessarily feel like that was going to point to a massive rebound for Knowles. Look what happened with XLM. So I didn't buy it back in, and now, of course, it's back up. Got rejected at the 55. Chances are it's going to bounce right off of my entry at that same support at 138, and then it should make another move up from there. It might even cross both EMAs. And if it gets into the Ichimoku cloud, chances are it makes it all the way to that 0.5 retracement at 155. The fact that it's a USDT pairing, I'm considering maybe getting into it because I can get into it and go to bed, and then I either wake up and I lose 3% because my stop loss is 3% below my entry, or I wake up in the morning and I'm up 30% because it went on a nice rebound like I originally thought. Like XLM just did. Really nice rebound. Just did 9% in 2 hourly candles. Actually, no, including that wick, yeah, 9.2%. And it's back above the cloud and the EMAs. That looks like if anything, that probably looks like one of the more bullish scenarios where I might get back in. I got stopped out as soon as we broke south of the 2 EMAs over here. I got stopped out. I could have bought back in at the bottom, but who knew? I didn't know it was the bottom. At this point, maybe I'll place an order and see if I could buy some and then just go to sleep and set my stop losses. Wake up in the morning, see if I'm up or down. It's midnight. All right, I'm gonna get off then because I gotta get up early for that meeting. So I'm gonna disconnect before I go. Does anybody else have any questions? Second green candle on Knowles. We're looking at it bounce back up. How are we feeling? Yeah, I just talked about that. That was my tether play. Again, I paired it versus tether because in this market, I have no idea what the hell is going to happen. And if everything collapses in the next 5 minutes, including Knowles and anything else, as long as I'm paired with tether, my stop loss will stop me back into tether where I don't have to risk taking any sort of hit on BTC or anything. So I think Knowles is looking really good. I would see if we bounce off of this yellow line here, which was my support. If we bounce off 138, I would buy at 139. and then I would expect to ride that, and then we'll see what happens. I would move up my stop loss if we were to keep going. If we make it up to the 0.5, that would essentially be the target. And this is the problem with what I had mentioned earlier. At this point, with the way we've seen this trading happening all day, I honestly don't feel like I don't have very much confidence at all that any analysis I come up with is going to be accurate enough to justify the risk to put money in. It's just crazy. This could all just be a short-term little bounce as a reaction to the absurdly low RSI and the really low prices, where everybody saw it and was like, we have to buy it because it's so cheap. That's probably all it is, but we'll see. But we could see something like that. We could see it bounces right off of this yellow line, my support. Maybe I give it 2 cents and buy in at 140 just so I can feel like there's some confirmation of a bounce. Set my stop loss, 3 cents below that, and then we'll see what happens when I wake up. I'm either up or down. That's what I'm going to do, I think. If you don't know how to set stop losses, use stop losses, how to target them so they're placed correctly relative to supports, whether it's a Fibonacci-based support or just a simple trading history-based support, I wouldn't do it. I would just keep your money safe, man. Stay in tether until we get some more stability and some more confidence, because right now, anything you do is going to be risky, and if you don't know how to work that risk the way I do, there's a good chance you could take a pretty big hit. Stop losses. You need to know how to use stop losses perfectly. If you don't, get the hell out of the market and stay out until you know. And use paper trading and other tools for practice. Check out my paper trading video on for anybody in here who hasn't. I did a video. It's on my YouTube channel. Intro to paper trading or something, and I explain how to set it up and how to use it on TradingView. And that's how I got to where I am today. I lost 50 grand in January. I moved whatever money I had left into Tether and kept it there. And I started paper trading, and I started studying and learning and practicing and training. And I didn't actually use my actual money in the market for a month until I was able to consistently bring in 5 to 10% profits using TradingView's paper trading feature. And I got to the point where I was that profitable that I started using my own money. But I was able to practice without actually putting my own capital at risk. And as you've heard me say 10 times already in the last 5 minutes, preservation of capital is paramount and the most critical aspect of investing. You can never get it back once it's lost. You need to maintain it at all times, at all costs. So if that means getting out of the market and watching the profits fly by while everybody else is buying into 10x plays, I don't care. Stay the hell out and practice your strategies until you know what you're doing. Then you'll run by all those guys and run circles around them, and they're going to be the ones getting wrecked and losing 94% on the next crash. So that's that. Any other questions on YouTube chat or anything? I don't think so, right? You guys are all good. Thanks for stopping by. I appreciate it. I didn't give you a lot of a heads up. We only have like 3 people come in from public group or YouTube, but maybe I'll do another public. I like inviting the public guys into the streams every once in a while. So, and for guys, premium members, I think what I'll probably do, since I have random crap going on the next day or two, what we'll do maybe, because I like having all time zones join in, so we'll do an 8 a.m. live stream and an 8 p.m. live stream on Thursday. So we could probably do both. And that way our Europeans, our Aussies, and our Americans can all jump in. 8 a.m., 8 p.m. Boston time, most likely. But let me know if there's another time that works for you. We can make some adjustments. But hopefully by Thursday, I'll have my risk mitigation and market reentry plan updated, where I'm including new details about liquidity and volume. And I'll put that together. Hopefully I'll have it ready to rock and roll by Thursday, and we can go over that, because that's an important topic, especially given what we're seeing now. Everybody needs to be prepared to enter when the time comes to get back in. So, all right, that's that. I'm going to catch some Z's. If you guys need me, just DM me. I'll still be in the group for a little bit, or I'll be up for a little bit if you need me. Let me know. And anybody in public who joined the stream, thanks for coming by again. And I'll make sure to invite you next time with more notice.